prices in many areas not responding to tariff increases, and seeing that, well, wait a minute, maybe the surprise here in the next 6 months is going to be much lower inflation, thanks to certainty now, more certainty about tariffs, tax policy, government spending, and regulation or deregulation, that we're getting ready to move from this rolling recession into a much stronger than expected recovery. In the next, I'll say 6 to 9 months, it will become obvious. I think we can safely say that our bull case is well over $1 million in 5 years.
Wood has long argued that the U.S. economy is in a rolling recession, a slow motion contraction, where sectors like housing and autos weaken one after another under the strain of aggressive rate hikes. Last year, she pointed out that housing was down as much as 35%, creating what she calls a recession-like drag on key parts of the economy, and she warns there's still more downside to come. By the way, if you're enjoying this breakdown, make sure to like the video, subscribe, and drop a comment below. It not only helps the channel grow, but also signals to the algorithm to share this content with more people like you. Let's continue.
I think it was interesting in the Fed vote today, there were 2 dissents, and we have not had 2 dissents since 1993. And I remember those because I was in the business back then as well. And I think that's very important symbolically because Chairman Powell has wanted unanimity. And so now we've had a break. And part of it is because Chairman Powell's term is up in May of next year. And maybe the 2 governors dissenting want a shot at that position. You never know. But maybe it is because the 2 governors, and I haven't gone through all of the notes yet, the 2 governors are seeing evidence of housing relapsing here and prices in many areas not responding to tariff increases, and seeing that, well, wait a minute, maybe the surprise here in the next 6 months is going to be much lower inflation. And we've had a few employment reports that they have something for everyone, some strength, some weakness. But I think what's beginning to concern a lot of people is that the unemployment rate for new college graduates is going up. And that's because entry-level positions are being subsumed in many cases by automation, especially AI. And so I think they're looking at this as a potential concern out there. We have been saying for quite some time that the economy has been in a rolling recession. When the Fed jacked rates up 22-fold in little more than a year's time, one sector after another began to give way, starting with housing. Housing, by many measures, is down 35% still from the peak. And we're seeing some metrics take another step function down. So I think that has some people concerned. I think the housing inflation numbers are going to come down. They're already, the monthly numbers that we get from various sources are showing declines. Year over year, they're not declining, except for maybe median existing home sales. But we do think that one of the solutions to the affordability crisis, if sellers really want their homes to move, they're going to cut their prices. And because that is if interest rates don't come down. And if they do cut prices, then the big surprise in the latter part of this year is how low inflation is going to go. And there's a big lag between the time home prices fall and they get into the statistics and leave the statistics as well. So this is going to be with us for quite some time. So I think we've been saying we believe that thanks to certainty now, more certainty about tariffs, tax policy, government spending and regulation or deregulation, that we're getting ready to move from this rolling recession into a much stronger than expected recovery. In the next, I'll say 6 to 9 months, it will become obvious. With productivity, one of the biggest surprises, it's already strong given the slow growth rates in the economy. I think year over year, it's still up above 2%, but we think it's going much higher thanks to all of the technologies around which we have centered our research. So robotics, energy storage, AI, very importantly, blockchain technology, obviously important here, and what we call multi-omic sequencing in the life science space. All of those innovations are incredibly deflationary. And the best example probably is AI. AI training costs are dropping 75% per year. I just learned from one of the founders of Tether, Paolo, that they had no idea that Tether would become an important source of dollar exposure to emerging markets until COVID, when the children of in families in emerging markets would go to their parents and say, you don't have to go into the black market today to buy dollars. We can do this on the internet. And that's how it really spread, which is fascinating, isn't it? We thought Bitcoin would serve that role because we didn't know about stablecoins. And even very recently, I think we're becoming very surprised at how quickly the uptake of stablecoins is. So if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025, how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack. But I think the much bigger force right now is it's the gateway into digital assets for institutional. It's a new asset class that and the really substitute for gold as a store of value. Another use case. Those are the two biggest, and those we have not changed at all our opinion on. So I think we can safely say that our bull case is well over $1 million in 5 years.
On the crypto front, Wood is all in. She stands by her bullish view that Bitcoin could soar well past $1 million within the next 5 years or longer, positioning it as both digital gold and a gateway asset for institutional investors.
Her base case targets around $700,000 to $750,000 by 2030, while her bull case reaches as high as $1.5 million. Either way, her forecast comfortably clears the $1 million mark. She expects institutional adoption to keep accelerating, lead by Bitcoin, followed by Ether, and until recently, Solana with Layer 2 networks joining the trend.
We are watching our clients and guiding them carefully into the ecosystem. Bitcoin, Ether. We do have private funds which had a very heavy weighting in Solana relative to ETH until recently. And, we made a very good move at a good time as Ether started to outpace Solana. So those are the big three for us. And, we're watching layer twos, of course, as well. And I think you'll see us, as we're trying to educate our primary client base, go more deeply into, the big three, talking in terms that financial analysts and investors will understand, looking at returns relative to risk, calculating the Sharpe ratio, the Sortino ratio, and so forth. So I think that's what we're really doing right now in terms of from an education point of view. That paper is in process. And the other thing we're going to do, like we have done with Bitcoin. So we put out something called Bitcoin Monthly. it's probably going to be Bitcoin bi-monthly, and we're going to layer into the alternative months Ether, Solana, and then the longer tail. So, and what this does is analyze on-chain and or look at and evaluate on-chain analytics as, again, we educate our investor base about the kinds of signaling properties that these protocols have that we don't have in equities or bonds because the transparency just isn't there the way it is in blockchain technology. So we'll do ETH, Solana, and others as time goes on. And as they begin to show themselves as interesting, especially to institutional investors. Next generation internet includes both crypto and AI, so that agentic AI theme. The two in the top 10, there actually are three in the top 10 of certainly the F and K: Coinbase, Circle, and Robinhood. Robinhood is not a pure play, but as we've watched, and I'm going to say about 3 years ago, our questioning when we had our quarterly calls with Robinhood was all around crypto. Your client base wants it. Where are you? Where are you? Where, are you building out your infrastructure? And at a point, we pulled away because they pulled away. And of course, now they're at full throttle. If you saw their analyst day and the debut of some of their crypto offerings, I think they're playing to win big.
So no MicroStrategy in that top three?
Well, no, because as I said before, with MicroStrategy, yes, that is a bet on Bitcoin. That's obviously the biggest asset in the space. We feel certainly that Coinbase is is powered importantly by Bitcoin, because where Bitcoin goes, others follow. So we felt that we had a good broad-based holding there. And as I said, Bitmine Immersions is not in the top 10, but we do think it's important now that Ether is showing up as an institutional preference, that it's important for us to be there.
Wood strategy centers on deep investor education, leveraging analytics like the Sharpe and Sortino ratios to benchmark digital assets against expected returns in equities and bonds. She's planning regular reports, starting with a revamped bi-monthly Bitcoin update, followed by in-depth coverage of Ether, Solana, and other altcoins, all tailored for institutional audiences. She views the transparency and signaling power of on-chain data as a clear competitive edge over traditional financial instruments. Thanks for watching if you found this valuable. The next video is even better. Click it now and let's keep going.